Scott, since you've been gone, food has lost its taste. I haven't slept. Really, life has lost all meaning. And you're right. You would have expected. Look, earnings season is next week. Does everybody understand that? Like, my first company reporting is Thursday, a week from today, J.P. Morgan. 2 weeks later, it's Apple, Google, Amazon, that whole crazy week. This is not like forward-looking. This is now. And it's really important that earnings hold up. If anything like a $4,800 target on the S&P is going to have any rhyme or reason. We have not seen that happen yet. We have not seen many companies materially lower expectations. There have been some notable companies that have lowered expectations like Netflix, but we just haven't seen it across all sectors, and we really haven't seen it in the S&P 100 stocks, which is where it would really matter for the full index estimates. If we finish this year at 4,800, that would be a major victory for the bulls. And how you get to a 20 times multiple, I think the only thing that you would be able to do to get there would be to say that at some point this summer, we have seen the peak in interest rate hikes. Because if you're not prepared to say that the Fed does 50 or 75 this month, another 50 in August, and then signals, hey, we think we have it, right? The data is starting to go our way. It's possible. I want to be open-minded, but that's the only way that I could come up with a rationale to say terminal rates are low enough that we could project out and say 20 multiple is reasonable. It's hard for me to get there 21. Mentally, though. So I'm not.
I mean, he's on the doorstep of 21. I don't even understand, frankly, how you can still be what she says today is Josh's earnings expectation projection is a better word for it, is unchanged at $230.
I'll spot him on. Listen, I don't think that's going to be the case. I think the second half earnings are not going to be great. I don't think they need to fall off a cliff, but I think what's going to happen is you're going to see the trajectory in earnings start to reflect what stocks have already done. So it is possible that we've done a lot of the work on the valuation side in advance of what the drop in earnings will be. But you have to hear it from companies, and you're not. So we'll see what happens. It starts next week. We'll see if and when that's going to be the case. But to your point, Judge, it really has not happened yet on the guidance side. And so I think on the sell side, the estimates right now are reflecting that. Will the rubber meet the road in these Q2 reports / Q3 guidance? We're about to find out. You ain't going to have to wait long.
No. And Doc, okay, Josh is right? And we've all seen it. Valuations have come way down, come way in. Earnings have not. Kind of goes to what Joe Terranova told all of you yesterday, which I was watching, that he bought NVIDIA back. And that got me thinking, okay, well, valuations have come down a lot. Is it time to go back to names like that and others? Maybe, I'm not suggesting that specifically, but the point being that there were a lot of high multiple stocks that have gone up an awful lot that have been cut in half, if not worse. And now maybe the time is right to start looking at names like Joe looked at NVIDIA and suggested it was time to buy it again.
Yeah, well, I guess you could do that, Scott. I'm waiting for some big institutional buying. I didn't want to put out the bunting, as they say, on this. Yesterday it was a 1.5% rally over the last 3 days. Today, if we were to finish around here, it's a little over 2% rally. Like I say, that's not something that you get a crowd lined up for and cheering. It's more or less hopium that's out there. People are hoping, and hope isn't really a strategy. What I heard yesterday, and what I read rather in those minutes, was not nearly as bullish as some people apparently are taking it. I think the Fed is still damned and determined to keep hitting us with higher rates. So to Josh's point, I think unless that fever breaks very quickly here, we're going to see higher rates, which is going to continue to drive the market lower. It's not going to be moving up higher in the face of that, in my opinion, Scott, because like I say, what I read yesterday and what Jay Powell said yesterday didn't imply, except for that one little thing that our friend Steve Leisman's hanging his hat on, I didn't see anything bullish about what you and I were listening to and watching and reading yesterday.
But not bullish, but it was like, tell us something we don't know. Like, we get it, right? We know what you're going to do, right? Maybe so it's not like they said anything bullish. It's just the market has maybe finally come to grips with what's not only happening now, but what's coming down the road, no? Doc? Well, Doc looks like he's frozen. He couldn't believe what I said either. Steve Weiss, I'm told you want to get in.
Yeah, I mean, it has started. Helen of Troy, and Josh is right. It's not the big companies, the important companies in the 100 haven't reported. But Helen of Troy put up a really good quarter. But in their guidance, they cut their guidance from a midpoint, say, of $13 to $10. Helen of Troy, for those who don't know, are consumer products. They typically buy mature lines from companies like Procter & Gamble, et cetera, and then put new marketing dollars behind them. And the company's performed well over the last number of years. I used to own it a while ago. But from 13 to 10, that's a 30% cut. I had dinner last week with Lee Koopman, and unfortunately you weren't there to pick up the check. Not that you necessarily would have been invited, Scott, but his number for next year,
I'm sure you made Lee pick up the check knowing you.